this period is fairly inevitable. And any asset that becomes $1 trillion liquid asset is going to get ETFs built on it in some jurisdictions. I mean, I think there's a risk, but I view it as overblown because I view Bitcoin as well designed as is. It has a block size limit for a reason. And, I think that basically the market forces will play out. I think, basically, if you view what Bitcoin is the most immutable and decentralized database we've ever made.
The Bitcoin price has gained notable traction since last year, as evidenced by a rally of over 145% over the last 12 months. Notably, the hype and the approval of the U.S. spot Bitcoin ETF seem to have bolstered the confidence of the cryptocurrency sector so far this year. Lyn Alden, an esteemed macro analyst specializing in Bitcoin and author of Broken Money, emphasizes the significance of Bitcoin ETFs in expanding access to the cryptocurrency for both institutional and retail investors. As a partner at Ego Death Capital, Alden brings a wealth of expertise to her analysis of financial markets and the evolving role of Bitcoin within them. Recent data from Farside Investors reveals that U.S. spot Bitcoin ETFs have collectively experienced an inflow of $221.5 million. Fidelity's FBTC stands out, leading the pack with an impressive influx of $99.4 million. Additionally, Grayscale's GBTC saw an inflow of $31.6 million, further bolstering investor confidence. Interestingly, this week saw a substantial overall inflow into these investment vehicles, totaling $948.3 million. This influx reflects a growing sense of confidence among investors in the cryptocurrency market. Lyn Alden asserts that the current phase of Bitcoin's development is largely unavoidable. Any asset reaching $1 trillion liquidity is bound to attract ETFs in various jurisdictions, including the United States. Bitcoin's price could be on the verge of another significant surge, fueled by upcoming developments in the cryptocurrency market. Building on recent macroeconomic trends, reports suggest that the world's largest futures exchange, CME Group, is gearing up to introduce Bitcoin trading on its platform, ready to uncover more insights. Remember to subscribe and turn on notifications always to get our latest content.
This period is fairly inevitable, and any asset that becomes $1 trillion liquid asset is going to get ETFs built on it in some jurisdictions. And in the United States case, we have some degree of separation of powers. And so even though the SEC didn't particularly want this, they lost in court. And so people want this. And so now more people can access it. There are pools of capital that, there's retirement accounts, there's managed assets, and a lot of them have not been able to access it. And now they can. So, and there's like imbalances built up. So the fact that they could only access it with like Grayscale has been an issue. And now there's kind of like this big release valve where a lot of capital can finally get out of that big entrapment and move to other places that are kind of more professionally managed or cheaper and things like that. So I think that's a process that's inevitable. I think concerns around centralization are somewhat overblown. Not to say that they shouldn't be brought up, but basically I think that there already was a pretty big chunk of Bitcoin sitting in Grayscale. Now it's rotating into BlackRock and Fidelity and a few others. The overall pie is growing moderately that's in those environments. A lot of people in those environments, they prefer that. Whereas I think it's important to say make self-custody reasonably easy for people to make sure people understand the risks. But I think, again, it's just people have more optionality now. There are a lot of people that wanted to have Bitcoin in their 401k and couldn't. Now they have more options, or they have assets with an RIA and he or she is just unable or unwilling to put some of that money into Bitcoin. Now they can. And so I think that's inevitable. Even if it's not good or bad, it's just inevitable, right? So it's not like I see people saying, oh, Bitcoin deviated from its mission because ETFs exist for it now. Well, it's like, well, Bitcoin didn't make the ETFs. The fiat system made ETFs for Bitcoin. And that's basically the fiat system upgraded its APIs to plug Bitcoin in this method. ETFs are basically an API into different asset classes. They decided to plug into Bitcoin now. And, you watch out for big centralized honeypots, whether it's ETFs, whether it's Binance, whenever a lot of Bitcoin are in one big custodian, that is a risk. So right now, a lot of them are in Coinbase. I consider that not ideal. So I think people should be cautious about that. If you're going to hold ETFs, you probably should diversify across custodians. But I also think that, it's good to take self-custody. And so, we'll see where that shakeouts over time. But I think that that's just an inevitable stage that Bitcoin was always going to go through if it was ever going to get as big as it has now. If the market cap is 1 billion, it's impacting the small number of people that use it. Bitcoin had impact as early as, when WikiLeaks turned to Bitcoin to get donations. So around the margins, it began impacting people right away. But in the larger scale of actually being able to affect the value of a currency, a fiat currency, because people in that country now have more options. That's macro scale. When value moves around at size and at speed at the scale that it can do now, that starts to be relevant. And that's why you see governments paying attention to it. That's why you see institutions paying attention to it, because it's shown staying power. So it's not just a fad. It's not just some technology that seems like it works for 5 years and then breaks. It's shown resilience. And then 2, it's reached a scale that this actually matters for non-techies, it actually, people that are just looking for pure utilitarian use case. There's a lot of people in that situation that find value out of it.
Bitcoin price action in the past 2 days has confirmed the resumption of the bull run. However, Bitcoin needs to clear a few key hurdles before investors can go all in. Bitcoin is replicating the same path as it did after the 2016 Bitcoin halving event, with one indicator signaling it may be nearing its local bottom, and another indicating it could reach $350,000 during the peak of this cycle. According to crypto traders, Bitcoin's price prediction for the next decade has become a hot topic, fueled recently by Jack Dorsey's bold statement that Bitcoin can reach $1 million by 2030. British financial expert Raoul Pal recently predicted a substantial surge in Bitcoin's value, hinting at a parabolic rally during an upcoming crypto summer and fall. Lyn Alden doesn't have a clear outlook for the next 6 months, but she's positive about Bitcoin's long-term price prospects. She highlights how challenges, like fee spikes, stimulate advancements in scaling solutions. Viewing Bitcoin's evolution through response mechanisms, she sees it as a natural process and is confident in the network's resilience to tackle obstacles. Now, let's redirect our attention to a video.
Well, so price, I have no view in the next 6 months or so. I'm optimistic on price for any multi-year period. And I think it's important to remember that, the quote unquote like Bitcoin community or Bitcoin Twitter or Bitcoin, like this is like kind of Western world Bitcoin users. This is like a piece of the iceberg. This is kind of the part that's visible to us. We're participating in it. There's more. There's globally, it's bigger than we realize. And also, I've focused a lot on response functions. That goes back to my kind of system engineering background and I've generally found for example, when I analyze macro systems, whenever things start to tilt a certain direction, people start freaking out, and they don't realize that when it hits a certain point, there's going to be a pushback mechanism. It's going to push back in the other direction, and then when it goes back in the other direction, they freak out about that direction. They think that's how it always is now, and then there's a response function that tends to push it back. And in Bitcoin, when it was in low fees, there were critics saying, "Look, it's got low fees, it's got a security problem, Bitcoin's broken, XYZ." And then, it's got people kind of spamming it with JPEGs and meme coins, and then there's high fees, and people are like, "Look, it's high fees. This is broken. The sky is falling." I think Bitcoin is valuable in large part because it's hard to change. It's like the U.S. Constitution. The U.S. Constitution is not perfect, but the fact that you require such major supermajorities to structurally change it is why, despite being imperfect, it's immeasurably valuable. And Bitcoin is kind of like that in digital form. It's this protocol that, it's like any engineered system, there's trade-offs. There's certain, there's fees, there's UX challenges, there's, all sorts of limitations on it. But the fact that it's really hard, it's not impossible to change, which would also be bad. But the fact that it's really hard to change is important. And it protects us against our own swings in emotion. We go back from, this is never going to work. And then, fees are low. Oh, now fees are super high. This is all broken. In order to scale, like all these scaling things on Bitcoin are really only going to come because of fee dislocations. If it costs 50 cents to send something on chain, there's not a lot of reason to build scaling technology on top of it because, you can speed it up, you can use Lightning if you want a faster thing. But if if transfers cost 50 cents, there's just not a lot of, it's clear that there's not a lot of economic demand for scaling. On the other hand, when fees spike, either because there's a bull market and a lot of people are kind of pulling into self-custody at the same time and congesting the market, or because people are temporarily spamming it with the fad, that says, okay, well, we don't know when these fee spikes are going to happen in the future. We want to have more optionality in the future to be prepared for these fee spikes. So let's build this solution. Or, hey, we found out that this tech approach was not working. Let's shift to this tech approach that holds up to this better. And so, yeah, because I analyze things through response mechanisms, I think that this was another inevitable thing that Bitcoin would go through. And it doesn't mean that it's guaranteed to win, but it means it's guaranteed to have had this challenge in the first place. You can't freak out because it's having this challenge. This challenge was inevitable. Now that it's having this challenge, the only thing you can do is be constructive and say, well, what's the most important things we can do to ensure that Bitcoin succeeds and comes through and meets the challenge. And I think that because Bitcoin's well designed, and I think the incentive structure is good, I think that the network is very robust to these types of things, and that over time, better scaling and privacy solutions are being built. And part of the reason they're being built is because people either experienced these problems or because they anticipated these problems.
April was a challenging month for Bitcoin ETFs, with $344 million in net withdrawals. May has been a positive month for spot Bitcoin ETFs, as noted by Bloomberg's senior ETF analyst, Eric Balkunas. He emphasized that such fluctuations in ETF inflows and outflows are normal. He advises traders not to get overly emotional about these changes, as they are an inherent part of ETF investing. He remains optimistic about the long-term net positives of spot Bitcoin ETF flows. What is your stance? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.